Yeah, I'm losing my
Today we're
edge.
talking about currencies and what a mixed bag it can be. You know, foreign exchange is an asset class that we advocate for trading often on this show because of its diversity relative to stock and bond positions. So, very often you can trade currencies without any hindrance to long-term investment in other asset classes, or even if you're short-term trading, very often you can see maybe a big move in the euro currency or the British pound or the Australian dollar. And if you have a short-term position in an equity or interest rate product, you really don't have to worry about those things, moving together against you or together in your favor. Very good diversification with this asset class, and just poses often different opportunity when stocks like today and last week get a little boring. S&Ps, Nasdaq, across the board, those stock markets grinding higher, but a ton of back and forth in these currency products. And also going back to when I first started trading, Bank of Japan was doing a lot of random stuff, and the yen was moving a ton. And a couple years after that, there's Brexit. The British pound is moving all over the place. Euro zone goes to sub 0% short-term rates, and they're buying up all these assets, and the euro currency is moving all over the place. And now the US dollar, actually, the last year or so, has presented a very interesting, different trade from those traditional asset classes of stocks and bonds. So I want to break into it a little bit here, because I'm hoping that other people break into this asset class for their own investing or short-term trading opportunities. But Pete, if you're back on with me here,
I am, my friend.
The problem,
you miss me?
I did not. Yeah, I missed you. I more than missed you. I felt stupid because I started having a conversation with a frozen screen, and I was making some kind of dumb joke about.
Sorry about
suits.
that.
No, it's not your fault, man.
I don't know if you heard. Yeah, I'll save you a suit for your parole hearing.
For my, that's more. See, that's what we needed right there. That punchline. But yeah, that is a more apt use probably for me in the suit. I don't intend getting married or anything like that anytime soon. But Pete, for those who are looking to trade currencies sooner rather than later, here's the problem. Like today, very interesting day in the FX world. But Pete, the mixed bag effect, right, which is super empowering for very experienced professional traders who've been around, like you, Pete, who's been trading these FX markets for years and years. It's nice to have all these different options, but when I get there and you tell me, wow, currencies are the real the asset class that I would put the spotlight on today, Monday afternoon, for trading purposes, and then you go down the line and you've got a euro that's up 0.7%, sterling that's only up a quarter of a percent, Australian dollar, the outperformer, up almost a full percent, which is a huge move for a currency. I mean, these currencies usually move between 6 and 12% on a yearly basis. So big 1% move in Australian dollar, and then Canadian dollar up only a little under 0.5%. Right. This mixed bag effect scares a lot of people off, right, Pete?
Well, it does. So you know what? If you don't want to play the crosses, which is a different kind of trade, today would have been a tough cross day. Honestly, I don't know.
Yeah.
What you would have necessarily picked. In hindsight, you would say, well, the Aussie because of the Chinese play, all after the fact. But my point being is, if you wanted to take selection problem out of it, so I buy euro, I buy sterling, I buy Aussie, and I buy Canada. So I'm short the dollar because I'm long all these currencies. Fair enough. How do I do that in a managed way, though? I'm committing a lot of capital to buy euro, and it's not like because I'm all the same way. Maybe you want to be, and this is how you solve selection dilemma, by buying them all, because you're not sure which one's going to be the right one. You can. It's a lot more positions to manage. It's a lot more transaction cost, and it's a lot more capital to do it. So there is the challenge. I don't want to do that because it's a commitment. That's 3 commitments I don't want to make. So let's talk about making a much better choice here. I just think that, there's not a lot of people trading currencies or dollars. When you compare in the world of self-directed retail traders, equities are always they're number one. Then it's usually metals or oil, and kind of down the list we go. I think we're going to talk a little bit about this today, but the ability to add dollar trading into your portfolio, you guys are going to find that that is really a nice mix of opportunity.
Yeah, absolutely. Especially it's almost like you've got this mixed bag. I don't know which one to pick. Hopefully I picked the right one. Well, what's nice is that SFX here put that bag all together. You're just trading the bag itself, which is nice. Like you've got these this range of performance here on a day where the dollar is down. But instead of, oh, I got 0.3% instead of 0.7% with the euro, well, here in SFX, you've got something that today is just down around 0.5%, which
Right.
is just an accumulation of all of this performance and an average out against the dollar, because this SFX product is the US dollar. So that's why you got the inverse performance here, negative today when these other currencies are positive. But also it's just got weightings of each of these currencies and more. Pete brought up the Chinese renminbi, and that being the outperformer here today in the FX world. And that exposure is playing out in this dollar product. So yeah, a simplification of that mixed bag, which is nice because you look at today and then also you look at longer term performance here, Pete, and you've got a lot of trading outperformer and underperformer here. As you can see, at a certain point, Australian dollar was down almost 20%. Now Australian dollar is back to unchanged, whereas sterling here, the blue line, was outperforming all these currencies for a good deal of this chart and is actually the underperformer now. And trading euros against sterling, trading Australian dollar against Canada here in that orange line, maybe buying this purple and selling this orange. That's a nice trade, and that's a nice advanced thing to look at. That currency cross that takes the U.S. dollar out of it, but this turquoise line here is in my mind the best place to start, because you've got here, especially you look at this dip in mid-March, when all these the coronavirus fear is really breaking and it's shaking up markets. And depending on the market you chose here, you've got performance from down less than 5% all the way to down more than 15%. Whereas this US dollar product just kind of takes a summary of all of this and is up about 8%. And so it's a nice place to start that gets all of these exposures without having to worry about the outperformer or underperformer. Save that for when you get into more advanced currency work. You don't want these varied returns when you first get there, right, Pete?
No, absolutely. And you know what? We always say this, it's not either or. I'm trading the currency pairs against the dollar or trading the dollar index. You know what? Start with the simple piece, get comfortable with it, and then realize the opportunities that come off of it. Don't, there's a great, we gauge, I think you and I have learned working together and as a team of trying to force feed too much down everybody's gullet, so to speak, and creating multi-leg strategies that we find in our mind get us to the most effective chance of success, but are becoming just complexity in their nature becomes prohibitive to implement. So, you know what? Let's start with the simplest thing, which is this simple expression of dollars, and then you can always look to add. I'd much rather start with something, build on it, than have to. Okay, I got to deal with all this complexity, then re-engineer it into my world that makes sense. So
Yeah,
I think this is really important.
And yeah, this is another cool piece that I was just looking at here today, because this is something that we're going to see is very dynamic and changes constantly. But also, it's a matter of getting the truest exposure to the U.S. dollar as possible. Because you look at this and you see the correlation between SFX and Euro, Sterling, Australia, and Canada dollar there, and they're all 0.8 or lower with that inverse correlation. Very strong. And
I
that's
did
because
not realize that. This is great. It's very interesting.
And they're all part of that index, and that's owing a lot to that strong correlation. But still, Australian dollar and Canada dollar are only maybe 10% or less of the dollar index here, maybe around that 10%, and still a very strong correlation there. You're getting this full view of US dollar that isn't going through a cycle of, oh, now it's really not trading like any of these currencies. It stays the US dollar throughout. Whereas when you look at euro, right, and you look at these relationships to other currencies here, euro sterling, sometimes, Pete, I would say has probably had as strong a correlation of positive 0.8 or positive 0.9. Right now, sitting around 0.4, It's actually strongest correlation with Australian dollar, a currency that it has little
Yeah.
relationship to there with that eurozone currency. And so it becomes this game of, okay, you've got varying performance, but then also if I go to euro to get that dollar exposure, I'm getting a very different dollar exposure than 6B here, because I mean, the correlation is near zero there. So if I went to, say I wanted to, like you've been doing, Pete, sell dollar, instead of going to SFX and just selling that US dollar, I go to euros and I buy euros against dollars. Well, if I had done that relative to sterling, a very different trade, even though they're both in this scenario pegged against the dollar. And so it becomes this game of, okay, which one has the highest correlation now? And then also you bring this into it, Pete. Here's the rolling correlation of euro and sterling, constantly moving back and forth here. The relationship's changing at some points. I don't even know how this was possible, but euro and sterling having a negative correlation, even though they're both of these products are priced against the dollar. It becomes this truly mixed bag
Yeah.
with a lot of randomness involved.
Yeah, and I don't know if that was whatever Brexit phase 12 or whatever it was, but you're absolutely right. So in itself, a trade opportunity, absolutely, but a different one. It really is a trade away from the dollar. And honestly, this type of change in correlation. If you look at the last 5% here, closest to the end here, that's an interesting back and forth of a correlation. The other 80% of this chart, going back to July of 19, that's a tough reversion.
Yeah.
We don't trade reversion of correlation. We trade reversion of the pairs. But when you have a divergence in correlation, there is no reversion in the pairs.
Exactly.
So,
it's like what we're seeing with
yeah.
that Russell and NASDAQ right now, where it's like the core. And I actually crunched numbers because we were doing research for a new product here. And the Russell and NASDAQ, two stock markets right now that have a near zero correlation. Today, one of them is selling off when the other one is being bid. And it's a similar relationship here where it's like, man, I want to go to one of these for my dollar exposure, but they're extremely different. And I just got, in equities, maybe I have a better wherewithal for, okay, these are large cap tech stocks and these are small cap, more diversified sectors between NASDAQ and Russell. But when you're just trying to get into currencies and you see something like this and someone told you, oh yeah, go to euros or sterling for that dollar exposure, they're extremely different. And it makes for a really tough first foray into this market. And so why not start out with something that is this full basket of currencies, not making you pick different between different currencies there, and also giving you some great two-sided action here, Pete. You've loved being primarily on the short side of this US dollar. You saw a nice run up to start the year, and then a sell-off back to unchanged, and then another huge run up to up almost 7%, up past 7% at one point in US dollar, coming all the way back to almost unchanged on the year again. And Pete, these big percentage moves, this potential opportunity for trading can also, it translates to smaller notional moves than these traditional currency futures, as well as these percentage moves higher and lower. I think equated
scaling in around an idea here,
$300,
right? Scaling in around an idea around this last part of the last, the most current 15% of that chart. Was I early? Yeah, I looked for that first we saw 3 bounce backs in the dollar. I was excited about the first one, but the other 2 gave you good entry points too. And this will be an interesting story. And I'm not saying like, once we break zero or unchanged, there's going to be some sort of incredible inflection, but it will speak to an interesting change in dollar performance. I think, and it's not like I'm dying to sell more dollars because we've broken the zero bound, but I think we'll have interesting inflections on both sides. This will continue to be an independent trade and a very interesting trade. At some point, we'll look at metals in the dollar, and here's the great thing with metals in the dollar. It was always saying, well, am I going to look at euro against, gold in euro terms, gold in sterling terms, and they're all different in terms of their performance. I just want to trade gold and currencies. That's what these products give. Okay, I've just taken out that whole selection dilemma, which is really what you want to do. And as we roll these out and some of these strategies, we'll talk more about that. But yeah, this is tradable. And I know some people are saying, "Oh, Pete, you're selling a market that was up 5%, and you're selling it on a 1% bounce." I was. I am. I've got an opinion as to dollar direction. But you saw here a couple of different ways to, and it happens today that dollar's stronger, which is. I'm sorry, a dollar is weaker today, which is, working out. But good back. I mean, you talked about this. What we want to see is a lot of back and forth. And we're seeing back and forth here in a reasonable amount of money. I don't want that euro move at its highs. We were 40 points higher. So that was $1,000 euro move on one day. And we pulled almost halfway back. So what does that mean? Well, there's two-way action. Sure, there is. If I could sweat out, if I'm not going to be frustrated, missing the whole $1,000 up move, that I didn't cover them at the highs, and I don't know why you'd pick that as some magic cover level. And now I've given back half or adding to it basis those swings. Here's something that is very scalable, and I think that's incredibly powerful. I like the simplicity. I like the scalability.
Well, and yeah, you're talking about how you're selling this 1% bounce. That's Pete's strategy. It's a matter of what we're trying to do at the small exchange is give people the easiest route to jump from asset class to asset class to have their own strategy on. Because when you're jumping from single stock to single stock or ETF to ETF or stock index to stock index, you're going to have the same strategy on essentially the same markets. But at the small exchange, trying to drive people with all of the empowerment that's been happening with retail traders, people taking their finances into their own hands, not needing to pay a specialist to manage their money, and all the great work at different companies to get people onboarded with options on stocks and futures in general, or just all these different things. The next move is retail traders breaking outside of just those equity markets. It's like you learned how to trade shares of stock up and down. That's great. You learn how to look at call and put options on those stocks and or futures derivatives or these different things. Also now add this to your tool belt, different asset classes. And at the small exchange, when you're jumping from stocks to foreign exchange, this is going to be the simplest way for you to get that foreign exchange exposure. Same with, as Pete's saying, going to metals, very simple, small product that makes it easy for you to taste that new asset class without having to jump in like today with a over $1,000 move in the traditional euro futures. It's just a matter of getting people to this new point simply and letting people with SFX, this small dollar, letting people trade a full basket of currencies and not having to search through a mixed bag.
Right.